Evening, everyone, and welcome to the June edition of Digging into the BI. This is where members from the Maryland, DC, and Virginia area look at the latest issue of the member-only magazine, the BI. Sorry for the delay there. We are volunteers, and we were stumbled a lot on the new stuff with go to webinar. So we are think we got everything resolved. Hopefully you can see it. We have a nice turnout tonight. Here are the three stocks we're going to be looking at tonight. It's going to be NVDIA, Zoetis, and Tennant. We didn't have a fourth presenter, and that means we're looking for you. So please come and join us and do a stock presentation. Standard disclaimer that you'll hear with everything in the Better Investing community is that we're doing this presentation for educational purposes only. We believe, as Better Investing does, that you should conduct your own review and analysis of any company before you make a decision on whether to buy or sell a particular stock. With these securities, we may mention that they're in our own personal portfolios. If we're showing you stuff here, it's not necessarily an endorsement of any websites, products, or services. This is being recorded and it will go up on our YouTube page, and I'll talk about that in just a moment. So again, a lot of regulars here, so this shouldn't be too surprising, but this is Better Investing, where it's a investment education organization out of suburban Detroit. We focus on long-term fundamental investing. And as I said earlier, all of us are volunteers. And that's the reason it took four of us trying to be able to figure out how to work the new GoToWebinar. Anyway, we're glad you're here. Here is the place on YouTube where you can find everything. It's at Digging into BI. We have 275, 76 subscribers. We'd love to have you join us and be there. This recording, like I said, will go up there. We only ask that what you do is that you like the video, you share it, and you subscribe to the channel. That's how the algorithm works on YouTube, and we would like to be able to keep that moving. All of the webinars are organized into what are called chapters so that you can just advance to the stock you want to listen to and then go on. So look at it as sort of an audio-visual first cut. And you can take a look and see what someone else's judgment is on that. Again, most of you are regulars and stuff like that. The biggest one I want to be able to point out is that the handouts, I don't even know if this icon is going to work anymore because of the fact that they roll things out and everything looks different on the back end. But there should be a place for the handouts. We think we got up the 3 SSGs and the slide deck. If you didn't get it, please reach out to Cheryl. And what's the address or the email that they're going to use for that to reach you? Anyway, we'll get to that email at the end to be able to let you know. But the fact is that this is what where you can be able to find everything. So why do we do this webinar? Well, we want to be able to show you, whether you're a beginner or not so much a beginner, sort of common judgments that people use in this community. And so this program was originally designed for beginners or people who are uncertain of their judgments, particularly on the stock selection guide. But we're also trying to show you sort of best practices as espoused through Better Investing. But you also see that there's a wide range of ways that people apply the SSG when they're making their own judgments. This is a joint program between the two Mid-Atlantic chapters. We like to promote our model clubs, and we'd also like to be able to promote your club in the Club Connect program. And while we are here for the people in Maryland, DC, and Virginia, you do not have to be from there to participate. You don't even have to be a member of Better Investing. We're glad you're here, and please participate if you have any comments or questions about the stocks when we get to the question period towards the end. So in just over an hour, we're going to be able to look generally at 4 stocks. Tonight it will be 3. We're going to look at the 2 featured stocks that come from the member-only magazine, the BI. That's a stock to study and undervalued feature. And then we have another one that I think Cheryl found through the ticker heat map. But there's a myriad of ways that you can be able to find good stock ideas with your BI membership and nothing more than your BI membership. The community is very active all the way around, and it's a great way to be able to learn from other people and trade your thoughts and judgments with someone else in our community. So This, again, the featured stocks, these were announced back on March 27th. Um, and so this was NVIDIA as the stock to study. Lee's going to do that. And I'm going to do the undervalued featured Tennant Company. But this can be seen by people both in BI and outside BI. You don't need to subscribe or have a username to get to this location. You can see they already have the stuff for July in Schwab and Dollar General. And we should have August up here fairly soon as well. Um, this is a place where you can be able to see all our future announcements, whether it's from the, you come in here to my account. From there, you'll open up in this one and you'll be able to sit there if you want to get news and information either from your local chapter or from headquarters. You want to go to this email product and subscription information. This icon, this screen capture on the right opens up. And this is where you can do where the yellow highlighter is. That's the BI weekly newsletter. And then if you want to be able to get stuff from your local chapter, click on it here. Then you're going to have to hit save changes to make it all stick. Here's what the latest stuff was in the BI weekly newsletter. This just comes to members, and it comes out at the close of business on Thursday. And if you signed up and you're not getting it, check your spam filter. But again, there's some really good stuff here. I like this one that they have today, talking about how to be able to use the analyst consensus estimates to work for you. And then also being able to talk about real estate investment trust or REITs. So just good information that's there every week to take a look at it. We also have a joint Facebook page with the DC Regional and the Maryland chapter. Again, you don't have to be a member of Better Investing to do it. And if you do have a club and you want to be able to let us know about it, you can connect with us this way. If you like us, then you can be able to sit there and tell us what you're doing in your club. People are always interested to see what other folks are doing, and it's a way to be connected, particularly since so many of us have our meetings online. Here's some of the things that the Maryland chapter, they just finished doing their annual review of the top 200 stocks. Roger Cronchi's been doing that for about 12 or 13 years. That was very well attended. They also have their board meetings, and they have several other events that are coming on up. But like a lot of chapters during the summertime, things are a little bit slower and the like. But they do have their stock pickers contest that will go through until about August. So again, if you're in the Maryland chapter, you can do it. It's always kind of nice to do little fun things like that. Cheryl, are you with us, and can you tell us
Yes,
about
I
the
am.
chapter?
You just missed our annual meeting. It was this past Saturday. We had Doug Gerlach as our guest speaker, and he talked about how to effectively use the PERT in keeping touch with your stocks that you in your portfolio or watch list or whatever type of portfolio you have, as well as how to research small stocks. We have two model clubs. And we will be talking more about them in a minute. But as Kevin said, things kind of slow down, and probably the next major event is digging into the BI, which is going to be in July next month. And we'll talk more about that a little later as well. So next slide.
Okay. Well, back to you, Cheryl.
I'm still, there we go. Okay, I'm a member of the Model Investment Club of Northern Virginia, and there is some of our fellow members. We had a combination of some other people at that particular event, but we meet virtually on the third Tuesday of the month, I'm sorry. So the next one is June 16th. It's from 7 to 9 p.m. There's the link. And it's a hyperlink, so you can get to it by clicking on that if you have the slides. Education and the new stock, we always have one of those each month, but I have not been notified of them. And there is the point of contact where you can send us a message.
Okay.
Next.
And I'm in the other model club. This is MCMC. It's a Montgomery County, Maryland Model Investment Club. We meet on the third Wednesday of the month. We are also online. And there's a picture of many of us, but we're not, there's actually multiple clubs in there. In fact, once a quarter, and 3 or 4 clubs get together in Silver Spring, Maryland, and have a little potluck and hang out and chat. It starts at 2 o'clock, and it just happens to be this Saturday. If you're interested in hanging out with people and you don't mind being near or around Silver Spring, you can be able to reach me, and I'll give you the email at the end that you can be able to reach me at. But it's basically the one for this, digging into BI at Gmail, and I will get you the information. We hope you can cook because we like good cooks in our operation. We like to talk about eating, where we've traveled to, kids and grandkids, and of course, stocks. So please join us. It's a great way to be social with other people that maybe aren't even in your clubs but have the same common interest. Cheryl, back to you and tell us about Club Connect.
Okay, there is a new program. Well, it's fairly new with Better Investing, and it's called Club Connect. And it is for clubs that are looking for new members or independent investors that are looking to join a club. There's just click on that link there that is circled in red, and that will take you to a form to fill out, and then you submit that. And people that are interested either way can get back to you, and you can see if they're a good fit and move on from there.
Okay. Since this is digging into the BI, we ought to talk a little bit about the magazine. You can get it both electronically, so you can see it on your computer, laptop, tablet, smartphone, any electronic device. These always come out earlier, and they're more reliable than what I get with the mail, although I have to admit I do like the paper copy of it, but I do glance at it, excuse me, from what I can see electronically and taking a look at it. One of the other things that you can get online is you can be able to sign up for the BI magazine for mobile devices here. And with that, you can also see a lot of this information, like I said, on your tablet and the like. The other thing you can do is where this red arrow is, anytime you have a featured stock, they sit there and they will give additional information that they didn't put in the magazine. This is where you find it. So for all the stocks that are undervalued feature or stock to study, you can find this information by just clicking on this analyst reports and other resources. One of the other things is trying to look at some of the articles. I do find I learned quite a bit from these, and I was sort of steered into Wayne Thorpe. He's the, I guess, what, president of Better Investing now. I think that's his title. Um, but he was talking about Seth Klayman's Margin of Safety, which is a very, very popular book, and it's out of print. And if you could get it, it will cost you several $1,000s to get it. But I really thought that what Wayne was discussing in talking about Klarman was that, understanding the difference between speculators and investing. And again, speculators, they have to be right about what other people do. Investors just have to be able to find good businesses for less than they're worth. And I definitely view myself more as an investor than a speculator. I think we all tend to think like that. But again, when people are focused so much more on what other people are going to do with respect to what the market's up or down, they're more speculators rather than long-term investors. Again, it tends to slow down here a little bit, but there's the Georgia Fair that's already in August. There's also the Pennsylvania chapter in Central PA. If for those people that are in the Mid-Atlantic, that's not too far of a drive to take a look at it. And then there's an online event, I think on the 15th or so in Houston, where they do their annual meeting and they talk about stocks as well. So there's one of the advantages of stuff being online is that you don't have to be from that area to jump in and see what's going on. So take a look at several of those things. All right, now that we've done all this, now let's get into our stock presentations. And we're going to go, Lee's going to do in core the stock to study NVDIA. And Lee, why don't you take it away?
Okie dokie. I'm Lee Outlaw. Good evening. I'm a volunteer director in the DC regional chapter. As Kevin said, my company tonight is NVDIA, which is on the NASDAQ. It's the June stock to study, and it's the most active member stock amongst all clubs. Next slide. Next slide. Okay, so here's the layout for this stock. You'll find it on pages 20 and 24 of this month's issue. I'll highlight a few items. Let's see, NVIDIA's been on a tear of late. The valuation consequently has climbed, raising the time-honored question, does the stock have potential to rise further? Many analysts and BI members appear to think so. In the May issue, it was the 21st consecutive issue in which the stock was ranked number one as the most active. Data centers are NVIDIA's key end market, accounting for 2025 sales of 193.7 billion, or 89.7% of its revenue. Sales in the U.S. account for 69.3% of revenue, and of the 30.7 derived internationally. Key markets were Taiwan, almost 20%, China, Hong Kong, 9.1%, and other 2.0%. Interesting, NVIDIA employs a fabless manufacturing approach. It uses external suppliers such as Taiwan Semiconductor and Samsung to fabricate, assemble, test, and package chips. NVIDIA focus on design, quality assurance, marketing, and consumer support rather than taking on the risk and direct cost of producing chips. Next slide. Its headquarters in Santa Clara, California. From the snapshot, you see some attributes of NVIDIA. Jensen Huang, Chris Malachowski, and Curtis Preem launched NVIDIA in April 1993, went public in 1999. NVIDIA originally focused on developing speedier GPUs for use in video games. Since then, the company has expanded its offerings, tackling categories such as AI, professional visualization, and supercomputing. Next slide. Okay, the statement you see is Jensen's opening statements to NVIDIAns and stakeholders in NVIDIA's 30 May annual review, coincident, which is with its 24 June annual meeting. Delving further into his letter to NVIDIAns and stockholders, Jensen states, AI is a new industry, the 5-layer cake. Like steam power, electricity, and information technology before it, AI is forming a new industry. AI is more than a model, it is a new industry with a 5-layer stack. Energy at the foundation, compute, chips, and systems above it, then infrastructure, models, and finally applications at the top. Next slide. Okay, this is the business overview that's found in the annual review. Highlights strong growth NVIDIA had in FY 2026. You'll see 65 year-over-year increase in revenue, a slight downturn year-over-year in gross margin, up 60% year-over-year in operating income, and up 67% in diluted earnings per share. Just a note, BI refers to India's fiscal year as FY 2025 compared to NVIDIA calling it 2026 FY. Next slide. Okay, so here are the reportable segments. Continuing the annual review highlights, it shows both reportable segments, which you see had very strong years. Looking on the right slide. Okay, next slide. Okay, here are the market platforms, and consistent with what you've seen so far, these 4 market platforms have all done well, with, as expected, the data centers contributing the major load, 68% year over year, up, and 93.7 billion in revenues. Next slide. Okay, we see here the total shareholder returns, that the total shareholder returns have been impressive. Note, NVDIA announced at their first quarter earnings call that they've increased their quarterly dividend from 1 cent to 25 cents a share. Also, NVIDIA has bought back 85 billion in shares the past 2 years. Next slide. And what we have here is the financial measures from their first quarter report. The first quarter ended 30 April. In addition to very commendable year-over-year increases, NVIDIA showed a market increase in performance when you compare the business overview year-over-year increases in the 2 most recent quarters. I don't show the chart, but in revenue, the year-over-year increase is 85% most recent quarter versus 65% on the previous slide. Gross margin plus 14.4 points versus minus 9 the last fiscal year. Year over year, operating income up 147% versus 60% FY26 year over year, and diluted earnings per share up 214% versus 67% for the previous year over year for FY26. Next slide. So next few slides show what some of the analysts say. Analysts published this report right after the 20 May earnings. It has NVIDIA as a strong buy with a 12-month target price of 270, which is a 31.6% increase from its 5 June close. Let's see, among the risks cited, which it assesses as medium, geopolitical tensions with China as competitors are making progress, elevated exposure to a select few hyperscalers, that could sharply curtail spending at any point. Hyperscalers are identified as tier 1 and data center industries, mostly Mag 7, Amazon, Microsoft, Google, Meta, and Oracle. These data centers project to spend $750 billion in the future, according to a 29 May Barron's article. Lastly, they say that high cyclicality, excuse my pronunciation, of the gaming industry is a risk, and also customer concentration on memory supply constraints pose challenges. Next slide.
5 minutes, Lee, 5 minutes.
Okay, for Microsoft, their key points base has a fair value of 280. As of the past Friday, it's under valued at 27%. Microsoft assigns NVIDIA's uncertain rating of very high due to nascent nature of the AI market, and poses as the biggest risk the pace of AI spending going forward. And I'll just add that Microsoft analyst note is very comprehensive, and it's an excellent read. Next slide. Okay, next slide. Value line. As you saw previously, Value Line notes that NVIDIA delivered another stellar quarter. Sales and earnings should continue to push higher in fiscal year 26. You saw that also. And investors have been harder to impress lately. Value Line notes its factors behind the stock's recent sluggishness likely include some skepticism about the long-term prospects for infrastructure spending, as well as concerns in Alphabet's development of in-house chips to support its highly acclaimed Gemini 3 model might erode NVIDIA's role in preeminent supplier in the arms race. And it rates NVIDIA just as an average 3 selection going forward. Next slide. Okay, looking at sales, NVIDIA leads the competitors I've shown here in historical sales growth, industry average, and peer growth. Next slide. For EPS comparison with NVIDIA, it trails Broadcom and AMD in historical earnings per share rates percentage, but its growth rate is very sound. If you notice, recently quarterly data does not compare the same quarter's time rise. However, NVIDIA's recent quarter, as we saw earlier, was strong, and Intel's most recent quarter was quite impressive. Next slide. This slide shows a peer management comparison. NVIDIA best peer industry and all peer groups averages for both return on equity and debt to capital, slightly trailing industry average and pre-course in a pre-tax profit on sales metric. Next slide. Next slide. Here are some detailed analyst estimates. The chart shows an array of analyst growth. They hover around 30% range for both sales and earnings. However, the BI editorial advisory and security review estimates are both 5% lower. I chose to use 30% for both growth estimates. Next slide. So here we have 30% for NVIDIA produces projected sales of 31.73 million, which closely matched Manifest Investments sales estimate projection. Next slide.
2 minutes, Lee, 2 minutes.
Forecast earnings per growth, 30% estimate, again, slightly below NVIDIA's trend line, produces a projected earnings per sale of 18.62, which is the average of Manifest Investing's earnings per share and the SSG analyst consistent estimate 5-year projections. Next slide. Forecast high PE and high price. NVIDIA's high PE is trending down. I expect this to continue given its earnings growth. On 30 April, NVIDIA's trailing 12-month PE was 70.3. As of past Friday, trailing PE was 31.8. I chose a high PE of 36, which is comparable to the 5-year average PE. And I'm thinking this PE 36 still might be a little frosty. Next slide. Low PE. Basically, I chose to reduce its current price by 35%, which comports with the downturn of its Mag 7 peer Microsoft from last fall to early spring. That produced a low price of 138. Next slide. So here we have the 5-year potential given the previous analysis. NVIDIA projects as a buy up to $267.20, an upside downside ratio of 6.3 to 1. Its close last Friday was $205 $208.10. Today, I think it closed of $208. So not much change. That could change the upside down ratio to about 6-1. So here are my conclusions. Next slide. So I have the NVIDIA is a premier large size growth stock. It's a market mover in the information technology sector. Its size and recent run up may be weighing on its stock price. Its current PE indicates it may be undervalued as it is trading below its 5-year average PE. Then it's currently a buy, as I mentioned, up to 267.2, and I view it as an attractive candidate for portfolio consideration. Do you have any more? Okay, a couple background slides quickly. Okay, there's been no shortage of NVIDIA in the news. Almost every day there's an article about NVIDIA. And this lists some of the articles that might be of interest to you if you choose to do further background on NVIDIA. As I mentioned earlier, the 20 May Morningstar analyst note should be amongst your reads. I also recommend the Bottom Barron's article on this list. It was, let's see, further, I'd add to the list an article in today's Wall Street Journal titled, NVIDIA takes the top spot in the 2026 list of best companies for the future. And then lastly, I think you have one more. Okay, this is from Barron's, and it's the article that I just mentioned as the last on the previous list. And titled, well, it has the chip Fab 5, and it's got a lot to say in there about NVIDIA. And that's it for me.
Thank you, Lee. And since we don't have a fourth presenter here, here's an opportunity for you to be able to put your club, promote your club, practice your presentation skills, and be able to show people that you know how to do stock studies or that you like to do stock studies. So please consider participating with us, and we'd love to have you do a future one. Now, after that, we have two that we're going to do in plus. Cheryl's going to do Zoetis, and I'm going to do Tennant, the undervalued feature. So Cheryl, over to you and tell us all about Zoetis.
All right. Thank you, Kevin. As you can see here, it's on the New York Stock Exchange, and I did find it on the ticker heat map. And here's one of its cartoons or whatever you want to call it, where it's talking about what Zoetis is all about. Next slide. So Zoetis began in 1952 as the agricultural division of Pfizer and focused primarily on livestock medicines. 2014, it became a private, publicly traded company, as I said, on the New York Stock Exchange. And that was in 2013 when it spun off from Pfizer. So in 2014, it acquired animal health assets from Abbott Labs, adding anesthesia, pain maintenance, and diabetes treatments. In 2018, it acquired Abaxis, a leader in veterinarian point of care tools. They are the world's largest animal health company, heavily focused on both livestock and companion animals, with a large portfolio of vaccines, parasiticides, and digital diagnostic solutions. As you can see, they have an annual revenue of $9.5 billion with 75 years of experience. They are 100 plus countries with market presence. They have 70% revenue from companion animal products and 30% revenue from livestock products, with 1,700 approximate R&D colleagues and 3,900 approximate field force members. Next slide, please. Well, they are building on market leadership to drive the next wave of growth. They have unmatched scientific and veterinarian experience with over $6 billion invested in R&D, an unrivaled scientific insight and IP depth with 300 product lines that is translating into the most comprehensive R&D engine. They have 90 therapeutic targets, 15 areas, and 8 species. Next slide, please. So here we have animal health poised for continued strong, sustainable growth. They have compound annual growth sales from 2024 to 2035, 5 to 6 each year. And that 35 goes on into the future, 30 and 35. So they are looking outward. Next slide, please. From discovery to delivery, science to scale model, there is continued learning and continual portfolio assessments with customer priorities of technical feasibility, commercial value, and return on invested capital. Next slide, please. They have a robust pipeline with expected major market approvals every year for the next several years, going here from 2025 on into the expected in 2030. The expected approvals in the United States, European Union, or other top 10 international markets, such as Australia, Brazil, Canada, China, Mexico, Japan, and the UK. Next slide, please. Pioneering emerging frontiers in animal health. This is why innovation in these therapeutic areas matter. With chronic kidney disease, which is the #1 cause of death in cats, there's a total addressable market of 3 to 4 billion. Oncology, which is the #1 death in dogs and 2 in cats, is a total addressable market of 1.2 to 1.7 billion. Cardiology is current treatments are not optimized for sick patients, is 0.8 to 1 billion total addressable market. Obesity and metabolic diseases. Nearly 60% of dogs and cats are obese, and compliance with dietary adjustments being as low as 30%. So there's a total addressable market of 0.8 to 1 billion. And anxiety. 70% of dogs face anxiety challenges with the TAM of 0.7 to 1.4 billion. Next slide, please. Simparica trio leads the expanding parasitic side segment. This is the largest segment in animal health, evolving towards oral triple combination products, which Simparica trio leads with. And as you can see, the growth is expected for, again, 2024 on into 2035, from 7 billion on up to 12 to 13 billion. Next slide, please. Zoetis is also positioned to continue to lead growing canine dermatology market. And that also is expected to grow on to the future from 1.8 billion in 2024 to 3.5 billion to 4.5 billion in 2035. It's a large untreated and undertreated population, and advances in testing driving higher diagnosis and treatment rates, supported by a pipeline that will further differentiate and fuel growth. Next slide, please. Revolutionary medicines continue unlocking significant opportunity in pain market, which also is expected to grow from 2024 at 1.1 billion to 2.5 to 3.5 billion in 2035. Recent approvals expand market opportunity, large and growing untreated patient population. Next slide, please. Here we have high quality products delivered by a world-class manufacturing operations. You have a large number of operations in the United States, both on East Coast, West Coast, and interior, as well as going into Europe, China, and in Australia and Brazil. Next slide, please. So global leadership, scale, and scope. United States leads with the revenue within the market of 55%, followed by other emerging markets in 10%, and other developed markets at 7%, and the remainder in the single digits. Next slide, please. Capital allocation priorities, they're reinvesting in their own business with buying back shares of stock, as well as a dividend commitment to grow at or above adjusted net income growth. Capital allocation strategy is designed to balance investments in growth, shareholder returns, and financial flexibility. Next slide, please. Shareholder payout is above the free cash flow. 3-year average shareholders payout was greater than 135% of free cash flow returned to shareholders. 13% compound growth on dividend growth and 26% on share repurchase growth. Next slide, please. Here are some of the key takeaways. Animal health industry poised for significant growth, capitalizing on trends in a resilient and growing industry, diverse growth drivers, robust pipeline to drive new growth, and creating shareholder value. Next slide, please.
5 minutes, Cheryl, 5 minutes.
Thank you. Here's value line. As we can see, the 2029 to 31 projections are 10% for a low and 19% for annual total return, with a timeliness and safety of 2 each and dividend yield of 1.8%. The PE ratio currently at 17.2. You can see following the line that the annual average PE ratio forecast is 22. Operating margins are forecasted at 45%, which is solid continual growth, and net profit margin at 29.8%. Also, in following the value line, you can see that the price is below the projected estimated value line, which may offer a triple threat. Next slide, please. So here the stock holds an above average rank for timeliness, and based on their ranking system, ZTS currently represents one of the more attractive year ahead momentum plays in the drug space. Their projections also suggest decent risk-adjusted capital gain potential for intermediate and long-term investors. And this was from their March 27th, 2026 review. Next slide, please. Here's Morningstar giving them their highest 5-star rating with a wide economic moat and exemplary capital allocation. The last price for 15 May was at $74.22. Fair value estimate at 140 is showing almost a 50% discount. Next slide, please. Here is CFRA review, which was dated May 30th. Right now, they are showing it as a hold, 3-star hold, with a 3-year projected earnings per share compound growth of 8 and a quality ranking of A+. Despite they downgraded ZTS to hold from buy following Q1 results, highlighting intensifying headwinds in the next quarters in their view. Despite challenges, ZTS maintains animal health leadership with its key products and competitive advantages through its 12-plus blockbuster pipeline worth $7 billion plus opportunities. Portfolio breadth across companion animal and livestock, proven R&D capabilities, and strategic development, including Neogen acquisition, could position it for long-term recovery. Recent approvals like Coventia RTU demonstrate continued innovation momentum. Risks include slower recovery from competitive pressures, persistent pet owner price sensitivity, reducing veterinarian visits, intensifying generic competition, supply chain disruptions, unfavorable regulatory rulings, and heightened competition in companion animal markets. Economic headwinds affecting pet ownership could extend current challenges. And that is why they're giving it a hold. Next slide, please.
2 minutes, Cheryl, 2 minutes.
Here is the SSG. The green line is dividends, which have been increasing since 2016, but also I did not highlight that line, but also their buying back shares is causing the number of outstanding shares to decrease as well. However, the sales line, it has a slight increase to it, and earnings per share, although it took a tiny bit of dip in 2028, is still on an upward momentum. Next slide, please. Looking at the 5-year average price to earnings ratio of 30.3 and the current price to earnings ratio of 12.9 is close to, it is about half of what that 5-year average is, showing that it is well undervalued. I have a average high PE of 28, which gave a forecasted high price of 215.5, and I chose the 80% for 62.1 for the selected forecast low price. This gives a potential price appreciation of 177.8 with an upside downside ratio of 8.9 to 1. A total return at the high PE of 23.7, and the buy price to satisfy upside downside of 3 to 1 and 15%. Total return is 100.4, which is the same as the buy below price. And again, that current price at on June 1st was $77.56. Next slide, please. Here's our potential gain versus loss thermometer. As you can see, the current price is about midway in the green area, again, giving us that 8.9 to 1 upside downside. Next slide, please. In conclusion, ZTS is a medium-sized company with the Morningstar Financial Health grade of C. It's a well-managed company. It's currently undervalued, as I said, with the 5-year versus the current PE, and a buy, as I also said, of that 100.04 to satisfy the 3 to 1 and the total return of 15%. And I looked at it at June 5th, and the price had come up to $79.44, but it's still a little up and down there. But it's a worthy candidate for your research consideration. And that's my conclusion.
Thank you, Cheryl. And I'm going to try to persuade you to look at Tennant, even though both, it's going to be kind of hard to top the two that just came on in here. But I think that there's something that's really kind of interesting when you look at sometimes these undervalued features like Tennant. So again, it's the undervalued feature. They're a leader in industrial, commercial and industrial cleaning. So they have like cleaning scrubbers that people can ride around, sort of like a Zamboni. They also have ones that are robotic and like, but as such, it's really a cyclical, which means they're impacted by the upturn and downturn in the economy. Um, so that means that they're really, dependent on the discretionary spending of their companies. I mean, it's really a business to business. They don't sell to individuals like us. They did try to do this rollout with which a lot of companies have been doing, enterprise resource platforms, and theirs didn't work as well as they would have liked. So they took a big hit in the fourth quarter, saying that they lost some money because it didn't work. Just a way for um, modern companies have to find a way to be able to track everything in their own system and make sure that they can communicate and get all that information. And a lot of it has been done by several different software operations that don't really talk with one another. So that's the way that an ERP is. But again, they're also impacted by tariffs. But again, they are rolling out some really interesting robotic products, and they really are at a cutting edge for something as basic as industrial cleaning. So it's in the S&P 600, um, and it's a medium-sized sales company. They're out of the Minneapolis area. It was founded in 1870 by George Tennant, who was a one-man shop on woodworking, and then he got into wood cleaning, and then from there he got into industrial cleaning. The BI article says that the IPO was in 1992, but as I was waiting to speak, I just saw something that said they had their IPO back in '69. So they've been around a while as a publicly traded company as well. About 2/3 of their sales come out of North America, most of that, of course, in the US. But they have been making acquisitions that will start to factor them into places in Europe and the like. But they uh, really make their money not just from the sale equipment, but a lot of the aftermarket parts and the servicing and subscriptions that go with that. So there's a lot of steady growth that comes in from all the other things that have to do. You have service personnel that are tenant people that go on out and fix the things that are doing there, and they, just sort of become sort of the shell answer man for those folks to be able to fix things and get it to work. And it's all integrated electronically so that they can be able to talk with the people back at headquarters or wherever their office is. Um, but if you look at this visual analysis, you look at that and you go, oh my God, why would I even want to look at this? I mean, this looks pretty awful. I mean, when we're talking up, straight, and parallel, this sort of misses. Um, it's got straight and parallel, but the parallel is going downward. Um, so that's not what we really like to see. But again, I'll sort of outline some of the things, and I suggest reading the article. They did hit a rough spot. And if you have a company that's really pretty good, and this is a strong financial health grade of a B, and it shows up, I think, with a quality ranking on Manifest of 77, that there's some things here that if you think it's a good company and it's hit this sort of rough spot and the price has been dropped a little bit, this may be an opportunity to jump in and acquire it. So again, like I said, it's a cyclical company, which means that the businesses in a cyclical, they go up and down with the cycle of the economy. The key is, do they have enough financial strength or health to be able to save, to be able to make it out of the downturn? They seem to have that. Um, and again, so their clients are always using discretionary spending, whether they want to be able to get a new scrubber or cleaner to go with it. Some people may say, why do I even need that? I can just have folks, scrub and clean, with a mop and a broom. Well, the fact is that one of the things of using their equipment is that it's faster. It saves time both on labor and being able to cover more with it. And that's the advantage of being in a company like Tennant. But if you're a beginner, if you're a newcomer and you're taught to sort of look at up, straight, and parallel, I think you'd probably want to look at one of the other two companies today. However, if you're a veteran and you can be able to see past the short-term horizon, this could be a good investment opportunity for you. So let me walk you through it. So like I said, they do industrial and commercial floor cleaning, cleaning machines, robotics, a lot of robotics, because what's happening is, these companies don't have enough people to be able to handle the jobs that normally would require someone to ride a scrubber around, that they're doing a lot of these where they're fully autonomous. So in many ways, they're a lot like cutting edge technology, just like you end up seeing with NVIDIA, in that they do have a lot of patents. They do work on a lot of things to be able to keep this stuff going. But they are really doing it on a day-to-day thing because, again, an industrial company or commercial place, they have to keep things clean. If they don't have, if you have general public walking around your grocery store and they slip and fall, guess who gets sued? And so having, the stuff cleaned and set up is really where something like a Tennant can come through and help you out. Their total addressable market is, and this comes from their own investor presentation, is about 9 billion. Remember, their sales is 1.2 billion. They're only about 14% of total market share. They have a strong market share here in the Americas, mostly here in the US, but they've been making acquisitions to be able to get themselves into the European market in Austria and in Romania and the like. And so that's one of the things that they've been doing to sort of take a look at it going on. They don't have as much coverage over in the Asian and Pacific Island and Australia area. But the two areas where there is some really good growth, they really got themselves pretty well positioned for it. And like I said before, they're moving into more robotic equipment just because of the demographic trend. I mean, there's not as much availability of labor to be able to do these jobs, these manual jobs. People are going into other ones. So you need to still get this work done. So how do you do it? You automate it. You end up having robotic take care of it. So this isn't exactly like sexy stuff, but at the same time, it's necessary for the day-to-day operations of all these commercial and industrial companies. And so as people shift to sort of modern mechanized stuff, Tennant is in a very good position to be able to take a look at these things. They're also trying to do things where they use less water, so it doesn't come through there, and how to be able to recycle the water to take care of it and how to make it sustainable. So they're thinking of all those things as part of their response to being able to make sure that the equipment works and runs. It's really kind of hard to find competitors, but I really like this website, Craft. They do a good job because one of the things that they do here is they show you whether they're a public company like Tennant, Wheelabrator, which is a subsidiary. Some are privately held, and you can get a pretty good idea because sometimes when we just look at competitors through the competitor spot on the SSG, we're only seeing other publicly traded companies, and they may not necessarily be a direct competitor to it. So I always like to look at some of these other things just to see what they're showing up, and some of the others are doing it. And also, because this company is only covered by, excuse me, by, excuse me, Value Line, they have a quantitative one from CFRA, and they're not covered from Morningstar. There really is limited coverage on what we would be looking for, completely opposite of what you see with NVIDIA or Zoetis. But here is Manifest. And again, they have a really nice quality ranking on this one. PAR isn't exactly spectacular, but this Prove, which is sort of an enterprise value, that's really pretty good. And this is all based on just a 4% sales growth. So there's some opportunity here to be able to take a look at it. And I'm going to use this information, the sales growth, to be able to help build out what I'm going to take a look at. So how do you take a look at something like this that has this visual analysis that looks like crap? We have here in 2017, they had acquisitions, but also that was the first round of the Trump tax cuts where they end up changing a lot of the lease requirements. So you'll see this with a lot of companies somewhere around 2017 that they get hit pretty hard. And then over here, the last 2 years, the CEO came on in 2019, and really in the last couple of years, they've really tried to sort of reposition themselves with stuff, and this is where they've been making a lot of acquisitions. And when you see either the sales going up or staying flat, and these pre-tax profit and earnings going down, it's a good sign that they have probably had acquisitions. And so here it is. You'll see again they bought a company in Austria that's dealing with some robotic and direct sales stuff. They also have they did purchase back here a robotic company to be able to help them, so that they understand what's going on and they throw off enough cash to be able to do this. They do pay a dividend, and They do have debt, but it seems to be pretty manageable for where they are. What I want to show you today is something that comes in the book, Take Stock. And this helps a lot when you have cyclical companies like this that have numbers that go up and down. One of the things that we forget is that if you look at how they did things in the old days, is they would sit there and just sort of look at the peak measured and just sort of measure things across the top. And I've sort of taken 2 or 3 different data points. And this would be the upper limit, or what's called the peak system if you look at some of the old SSG manuals. So that's 6% sales growth and 6.5% for earnings. I've already taken out the 2017 just because of the uniqueness of that. And also I'm doing that for 25 as well because all those acquisitions. But we see that as an upper band. But what you can do is you can also do it, and here's the next slide, is you can do it on the lower end. Let's look at all the downsides. So we know somewhere between maybe 4.5 and 6% is our sales growth. Earnings, you can see when it's down, I don't really have any good numbers to measure it. If I were to take this and measure it on the bottoms up over here, it would look really, really good. So here we can see that even in downturns, it's going to probably be somewhere around flat. So with that, I sort of get an idea of where my range is on this. So I'm going to build things out. I'm going to take my forecasted sales. Again, if we look at Value Line, they have estimated sales at 6%. Manifest is using 4. I use that the uncertainty bands, and I sort of said, okay, 5's not too bad. I can go with that. I know a lot of you like to be able to look to see what the analyst consensus estimates are, or to be able to sit there and see what a member sentiment is. But I think this is another way to sort of take a look at things as you're going forward. The next thing I want to be able to show you is that from this, I'm going to turn around and I'm going to do a preferred procedure. And the first thing that you're going to notice right away is that my preferred procedure comes up with a number of 25%. You're going, oh, Kevin, that doesn't make any sense. But what you can do is that one of the nice things about Value Line is they project some of the key features that we need to be able to create the preferred procedure. And you'll see that eventually my earnings per share, Value Line is saying that they think it's going to be $8 in a weighted 3-year average, and I'm at $7.35. And I'm doing this from the annual data point. So that's one of the things you have to be careful of, is that sometimes people will just look, and if you saw in this earlier slide back here, earnings said it was 5%. So some of you may immediately say, oh, I'm going to take this earnings at 5%. But the fact is that it's really this number, the 735 or the 8, that's really going to help drive what our number is going to be. So here it is. It may look like I'm really, really wild and crazy with the 25%, but my calculation still only gets me to 734, which is below what Value Line has. So if I use that as my
2
metric,
minutes, Kevin, 2 minutes.
thank you. I'll be able to look at the 10 years worth of data. You can see, again, it bounces around a lot. I took some out. Again, because of this last year where they took a lot of their earnings to acquire stuff. So the reason why the E is so low, so that makes the P really high or the PE really high. So it's just a math that's going on. But I can look at the historic numbers somewhere in the 26, 27 range, somewhere around 18 or 19 seem to be more reasonable. And using those as my judgments, I can end up getting this at a 205 for my high price. And I get an upside downside of 4-1. I get a potential price appreciation that's reasonable but not crazy at 142. And I selected a low price that was even lower than the 52-week low at 60.25. And they had some really a lot of price volatility in the last 6 to 9 months. So with this, I'm using the same payout ratio that you get from Value Line. I could have used a higher one, but I'm getting something that shows a 4-1 upside downside ratio with a 20% for a total return, higher than what the proved number is. And the par is 16.4, which is probably a little bit on the high side. I probably could have dropped that a little bit more, but I get this as a buy up to 92, 93, and is currently selling at 84. So I think this is a small, steady growth. It is not spectacular, but because of this reoccurring revenue that it has and the growth that it has, that will be something to take a look at. Again, this earnings per share at 25% may get you kind of squeezy, but if you take a look at what it is, like I said, and you outline what the number is, I think I'm really quite reasonable. when you look at this, historically, it's going to look really that it's really overvalued. But if we look at the future PEs, it's really pretty much in that same thing. It's sort of maybe slightly undervalued, but not crazy undervalued. Part of it is because it jumped already $20 from when they initially presented this at the end of March. So that's my outline for Zoetis. So now that we've done that, we're going to ask all of our presenters to be able to tell you how each stock sort of fits on the life cycle. And so again, here's our 3 stocks, and here's the life cycle that we get that's in our manual and shows up quite often. And Lee, you want to tell us why you picked that location for NVIDIA?
Sure. First, NVIDIA is not a new company as it was founded in 1993, but based on its fairly recent price run up and earnings forecast, I believe it's still got potential for explosive growth, though there exists a pervasive view of uncertainty about the sustainability of the AI boom, but still, you see where I have it on the chart.
Okay, thank you. Cheryl, Zoetis.
Well, Zoetis has a lot of competition and in the areas that it's in right now, but I really liked the pipeline and the extensive R&D that funds that they're putting into it to project on into the future. So I still think there may be some explosive growth, not a whole lot, but toward the tail end of that. That they may reap from that extensive funding of R&D and the things they have in their pipeline.
Okay. And like I said with Tennant, it's a long-term company that's been around for a while. It's not going to give you super great growth, but if you can buy it when it's sort of down tick, and it really was when they first presented this, it's come on up. But I still think that it could possibly be a buy at its spot. But it's really a mature growth. You're not going to see this crazy run up. But again, with that and a dividend payout, it may be something for you to consider with this. But it's definitely not something that's going to sort of be a world beater, but it's still it serves a very necessary role in our society to be able to make sure that industrial and commercial places are clean and are taken care of. All right, we've done all what we've gone through, and so now we want you to be able to vote on this. Is this something I'm going to have to do, Kent, or can you release a poll? Or Cheryl or someone.
A poll is out there if folks
Yeah,
want
the numbers
to
are
vote.
changing, so.
Okay. I really can't see, and I'm not, since I don't want to muck things around. I'll just sit here and wait till you guys say it's done.
Okay. Well, we're at 57%, folks. Doesn't cost you anything to vote. So please continue to put your numbers in there.
All righty.
We had a very
Looks-
good turnout tonight, by the way.
Yeah, we had it.
How many people do we have?
I've got 53 at the last time
Great.
that I was showing it.
Very good. Thanks all.
72% folks voted already.
All right. So
Okay. I think we can end it.
All righty.
Looks like you persuaded a lot of people there, Kevin. NVIDIA won out at 45%, but you've got 24%. And I don't even see Zoetis on there.
well, maybe
I'm
that's
seeing
the reason.
Zoetis at 30%. So.
Oh, okay. But
Yeah.
you still
Hey.
persuaded a lot of people.
I don't know. And normally when I do it on the round table, I'm lucky if I get into double digits. So anyway, so now that we've done that, here's again how you can be able to reach all of us. And this is a picture of us at Bink. And these are all the different people that have or will do presentations for us going forward. And that's just the people that were at Bink. There were a lot of people like that are regular presenters that don't go to Bink. but we have a really nice crowd of folks there. We're really glad that you're there. And like I said, if you want to know about the social that's coming up this Saturday in Silver Spring, you can find me and you can reach out to me here at diggingintobI@gmail, and I can get you the information. And again, we'd like you to be able to bring some food because we like potlucks and all. So keep that in mind. Kent, do we have any questions? Anything from the audience?
At this point, looks like no questions at all.
Come on, Steve Emmerich, are you still there? You got to be able to pipe
And
in with something.
if folks in the audience have any questions, if they want to raise their hand, then we would be able to get your microphone on so you can ask a question. At least I think we can get the microphone on. We'll see if it actually works today.
A lot of quiet people here tonight.
All right. Oh,
Richard,
Richard.
got a thumbs up from him, Richard Yanko.
Okay, awesome. Okay, very good. We're getting feedback from Richard. That's great. But no hands up yet. So I think, Kevin, we can continue on.
All right. So if you want to, and again, I think a lot of you are, you don't have to be a member of the DC regional chapter. Heck, you don't even have to be a member of Better Investing, but you can join our mailing list by going to this web address up here at the top and sign in. And we won't inundate you with a whole bunch of emails. We're just going to tell you of educational events that are happening here in the Maryland, DC, and Virginia area. You're always welcome to attend and participate. Some of them are even online. So if you're outside the area, you can do that. And that's really about it. Kent, do you want to tell us about why you should volunteer and do
Well,
fun stuff?
I think one of the big things we can say is we have been learning on the fly this evening. So that's been absolutely a lot of fun.
Here.
And I've learned a lot more about this particular tool, but I've also learned some really good things from presenting here at this webinar on how to manage and analyze my own companies for my own personal interest. But in addition to that, you can volunteer for a chapter as a volunteer or a director. And as a result, you can learn things like how to teach a class, how to work with other folks in the investing community around the country and indeed around the world. And so all that does pay some dividends to you in the realm of further education, better understanding, but it also provides some monetary rewards in the fact that you can get discounted access to the BI training programs nationally, as well as discounts to conferences like BINC. And so that's very, very helpful, in addition to getting some really good prices on the online tools. So we would encourage you to take advantage of that. Next slide, please.
So here's what we have coming up next month. And again, we're not going to meet on the first Monday of the month in July because that's near the 4th of July. This one we had to move back a week because I just got slammed at work. Some of us still have to work for a living, you know, so I enjoy my work, don't get me wrong, but sometimes it gets so busy that this time of year is kind of busy. So it just happens like that. But next month, we're going to have Charles Schwab and Dollar General, and we have two more that'll be to be determined. And I'm going to look at some of the people in the audience. I know some of you said you do a presentation, so expect emails from me coming for you. And again, thank you for doing it. I think that's one of the great things about our community is that people all sort of pitch in and help. And we will help you if you're short on either your SSG skills or your presentation skills or how to be able to put stuff together in PowerPoint. We have a lot of resources and people that will give time to be able to help you get better at that. And ultimately, you will become a better investor. So with that, here's the dashboards, which I haven't updated in forever. So one of these days, I'm going to actually try to get that done. But it won't be for at least another month because it's still busy at work. Anyway, Thank you very much for being here. Here are the public dashboards over at Manifest that you can take a look at. And here's again the link for YouTube. And again, if you're interested in doing stuff socially, we have, like I said, an event this Saturday. Send me an email at the digging.into.bi@gmail, and I will give you the information, and I will ask for some food for you to bring because I like eating, um, and the like. But you're more than welcome to attend and participate with us. Any final words from anyone else here in the back?
No, I'm just want to reiterate what you said, that we have people who can help you with putting presentations together. And usually when we do have 4 people, it's about 13 minutes for each presentation. As you heard, our timekeeper keeping time back there. So usually it's not too much to put all that together, including the SSGs and the Morning Star and things like that.
Okay. Well, thank you very much for being here. Come join us next month when we will dig into the BI in July. So good night, all.
Good night.
Night.
Kevin and Cheryl, you might want to take a look at the question thread. I got good
Okay.
comments out there. Steve Emmerich was being very.
I see that. Is
Said
he
you
still with
guys
us?
did a great job, which is why we don't have any questions.
Thank you, Neuros. All right.
Well, thanks
can
again, Cheryl, for pinch hitting, and Lee, always great to have you. Thank you very much, sir.
All right.
Talk is
take
here.
care, and we'll see you later.
Good night, all.
Night.
Good night.